Hey guys, what's up? Welcome back to another video. In this video, I'm going to be going over Zoom's 2022 first quarter earnings report. They recently announced earnings and the response to their earnings announcement was pretty positive. Their stock increased by about 20% over the last week, but despite that, they're still down about 70% over the last year. And from their all-time highs, they're down even more so. They hit almost $600 per share at one point, and that primarily came as a result of everybody shifting from face-to-face to online virtual conferencing. But now that people are going back to face-to-face, their stock has been plunging pretty significantly here. We can see it's now at $102 per share, almost at their listed price of $36 per share at this point. So in this video, I'm just going to go over their report to figure out what the financial and future outlook for Zoom's business is. And then I'm also going to be doing a discounted cash flow analysis to figure out what the intrinsic value of Zoom is, to figure out if at the current share price it would be a good buying opportunity from a value investing perspective. So first and foremost, for anyone who's watching this video who might not know, Zoom, obviously, they're a virtual conferencing platform, and most people probably recognize that they offer their primary plan as a free model where people are able to just use their platform for free to do smaller virtual conferencing. But then the main way that they make money is by offering these paid subscription-based models. They have Zoom Pro, Zoom Business, and Zoom Enterprise. And so this is really the main way that they're trying to grow their revenues, is by increasing the amount of customers that they have that are subscribing to these Zoom platforms right here, these other extra Zoom services. And they're also just trying to add on more benefits for these platforms as well as other solutions that they offer so that they can expand the amount of revenue that's being created from each individual customer. And we can see right here from their report, the first financial statement that they go into is their balance sheet. And we can see, if I scroll down a little bit here, they're comparing this last quarter to the quarter before that. And we can see that their total assets in their business have increased from about $7.5 billion to $7.9 billion. And we can also see that the majority of their business is financed by equity as opposed to liabilities. As we can see, their total stockholders' equity comes out to be about almost $6 billion compared to their total liabilities and equity combined, which is about almost $8 billion. And so this could obviously be a benefit to Zoom because it means that they're going to have more cash from their operating activities that they can use to reinvest into their business, as opposed to paying down like interest payments and debt from other borrowers, which other businesses, I mean, it depends on what a business is going for. If they want to increase their return on equity, then they might start increasing the amount of financing that's coming from debt. But in Zoom's case, they're not doing that. They're going for more of the financing from equity point of view. And we can see right here in their income statement, they're comparing the first quarter of this 2022 year to the first quarter of 2021. And we can see that their revenues have increased 12% year over year, up to $1.73 billion or $1.073 billion. But we can also see that their operating expenses increased pretty substantially. They started investing pretty heavily in research and development and sales and marketing, and as a result, their net income decreased by 50%. So we can see that from the first quarter of 2021, it was at $230 million of net income, but then in the first quarter of 2022, their net income was only $113 million, and also their earnings per share, basic and diluted, also decreased by about 50% from 77 cents per share to 38 cents per share. And something really interesting about Zoom is that at the end of the first quarter, they had about 198,000 enterprise customers, which is an increase of about 24% year over year. And on top of that, they had an increase of about 46% year over year in the amount of customers that are contributing at least $100,000 of revenue to their business. They currently are sitting about 2,916 customers that are contributing at least $100,000 individually to their business. And that was probably one of the reasons why investors responded so positively to their outlook, is because Zoom is pretty much proving quarter after quarter that their business is able to thrive in a face-to-face environment and that their business is continuing to grow despite the fact that people are no longer on lockdown. And so based on that knowledge, Zoom, considering the fact that their business is still growing, but their stock price is declining, they could present a pretty strong buying opportunity. And so lastly, right here, before I get into the discounted cash flow analysis, we can see that there's their cash flow statement right here, and their cash from operating activities has decreased slightly from the first quarter of 2021 to 2022, from about 530 million to 526 million. They bought a lot more marketable securities in 2021, about $1.4 billion worth compared to only $600 million worth in 2022. But then we can also see they started to repurchase more common stock in 2022, which is definitely going to increase the share price of their common stock in the short run here. And so now what I want to do is go into the discounted cash flow analysis so we can figure out what the intrinsic value of Zoom is. And so I got some of these estimates from Yahoo Finance, and Yahoo Finance is basically just predicting that over the next 5 years, Zoom is estimated to grow at about 13% each year, compounded annually. And they're also showing that the cash flow for 2021 was about $1.49 billion. They're currently sitting on about $5.65 billion of cash on their balance sheet, and they have about 252 million shares outstanding. And so based on these metrics, we can see that the intrinsic value per share for Zoom stock is basically estimated to be about $130 per share, with a 30% margin of safety of 90 and a 50% margin of safety of 64. And so compared to their current share price, it would seem that Zoom is currently trading at about a little less than their intrinsic value per share, as we can see right here at $130 per share. So based on those estimates, it means that Zoom could potentially present a good buying opportunity, especially considering the fact that, as we saw from their report, their business is still growing despite the fact that their common stock has been tanking over the last few years now. Also, to the right here, I did a quick competitor analysis just so that we could compare Zoom to their competitors in terms of some of their financial ratios. And their two main competitors are Cisco and Microsoft in terms of virtual conferencing. And we can see right here that the gross profit margin for Zoom beats out Cisco and Microsoft, but Microsoft takes the lead in the net profit margin, but it's still pretty similar to Zoom's at about 36% compared to 33% for Zoom. But then we can see in the return on assets ratio comparison that Zoom actually utilizes their assets in the most efficient manner in comparison to the rest of the industry here in terms of getting a return on their assets. So it seems like in terms of financial ratios, Zoom is actually doing pretty good in comparison to Cisco and Microsoft. So that added on to the fact that their business is still growing despite the fact that people are returning to face-to-face interactions, and on top of the fact that their stock price has tumbled over the last few years, plus the fact that we saw that their intrinsic value per share based on their current financial situation is actually estimated to be above what their current share price is. It looks like Zoom could be a really strong buying opportunity. I'm definitely looking at Zoom for myself. I might buy shares of it, I'm not too sure, but I would definitely love to know what everybody watching this video thinks. If you guys think that Zoom is a good buying opportunity, let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.